Some dismiss the recent recovery in Chinese equities as a dead cat bounce. Now, is that noise, in your opinion, or is it start of something a little bit more sustainable?
The starting point for Chinese equities, in terms of valuations, was healthy relative to the region, relative to its own history, and also US equities, which has been in the sort of spotlight for investors. So that's not a bad starting point in terms of valuation, but of course there were some risks around at the time, tariffs, worried about the outlook. We had policy support beginning in September last year, really, where it became clear that the government were really focused on addressing some of the challenges that were affecting Chinese growth, things like the property market, etc., weak consumption. And we've seen a lot of measures to try and help improve that. And then, of course, we also had a reminder of how innovative the Chinese companies can be in terms of DeepSeek, but we've also had some real innovation in biotech, and that's been a good performing part of the market. And the combination of these factors, I think, have really helped to boost investor sentiment. And we've seen flows come back into Chinese equities, which has helped them rally. A lot of that flow has been domestically led. It's definitely the case that international investors have probably been mostly on the sidelines. And their question now a lot is, okay, how sustainable is this? For me, I think for it to be more durable, it would be great to see earnings growth broaden out. It's been a mixed picture. In fact, it's been quite narrow in terms of earnings growth. Some sectors, some narrowly focused sectors like tech, for instance, has led the way. We will soon get the 15th five-year plan from the government, so we look at that closely. We're not expecting any sort of big bang type stimulus still. It's going to be very sort of incremental and very targeted, but positive developments on that front will go further to improving sentiment.
So Stuart, it sounds like you're cautiously optimistic. So how are our portfolio managers kind of managing their Chinese equity investments at the moment?
Yeah, there's certainly plenty of opportunities under the surface, but I think you really need to be selective now. What that means, I think, is paying attention to where there is sustainable growth, maybe being skeptical of some of the hype, particularly when that comes with high valuations.
So I guess it's down again to the same things, fundamentals, valuations, and sometimes it can be rewarding to not lean with the crowd, but really just try to be ahead in areas that no one wants or are very likely positioned.